Hi everyone. Today let's talk about returning to the classics of investing. Then we'll get into all the usual long-term data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's take a look at the classics. They're saying it's time to return. The classic buy the dip method, we've been talking about that for a while. And then the fear and greed index, a good market indicator, part of why we talk about it every single video. I like it a lot. It's a good metric. And then government bonds, prices starting to rise with every whiff of bad economic news, and the 60-40 portfolio starting to outperform at least a little bit. So dips between 5 and 10% happen on a yearly basis. They might turn your stomach a little bit, but typically they're good market money-making opportunities. The last time we saw it here, you can see markets did show a lot of strength after that time period, and you can see net inflows, markets buying up that dip, especially on the institutional side. Retail investors also buying it up. Big money flows. You can see $14 billion flowing into equities in the S&Ps on that August 5th dip. And part of the drop was actually triggered by these hedge funds. They were holding $450 billion and went to holding only $250 in July. And that was part of the trigger that saw that volatility go down. Saw huge spikes on the VIX. Makes sense. Something to watch, but that did not last long. We talked about that being a very, very high level for the VIX, something we don't see very often. And that is a good indicator to start getting into markets. And they also mentioned swift rebounds after 5% sell-offs happen in good economic conditions. And then the fear and greed index, they're highlighting once it reaches that 25 or lower area, that's usually a good indicator to start buying. And that was a good indicator here in October of 23. And then we got very close to that level most recently. We've been covering it on the channel. We always watch that indicator. It does give some good triggers to start buying. And then finally here, don't forget the 60-40 portfolio. I have been a big advocate for bonds here over the past couple of months. We knew that cuts were coming at some point this year. We know that they're coming in September at this point, a little bit later than most of us expected, but bonds have been rallying off of that news. You can still lock in some good yields and then start to translate those dividends into either more bonds or back over into your equities to try to accumulate some more shares. So 60-40 portfolio seems to be back in play with those higher yields in bonds. And then we'll see what happens as those rate cuts come over the next year and a half or so. Moving over to fear and greed, you can see we are at a 63. A week ago, we were at a 54. So markets have been rallying off of this kind of dip low that we had. And then looking at momentum, still hovering in the same zone. We were right at the highs of the week on market momentum. Strength continues to hover, but seems to be gaining a little bit of momentum to the upside. And then looking at breadth, extreme greed here. We'll take a look at the 200 breadth later in the charts, but definitely seeing strength there. And then looking at put call ratio, this has been rolling to the upside, definitely concerning. We were at a pretty low level after hitting 0.7. We expect this to kind of roll to that 0.8, 0.9 area, which usually correlates with a bearish move, but we haven't seen that quite yet. And then volatility still hovering in neutral, slightly elevated at 15.5, but nothing crazy. And then safe haven demand in extreme greed at this point. We are seeing stocks rally super aggressively compared to bonds, and then junk bonds still in fear as people are concerned about potential recession and how that's going to affect the bond markets. Moving over to the AAII survey, again, a massive number here on the bull side, 51.2, basically has not moved from the previous read. Neutrals getting squeezed, bears stepping up a little bit. The concerning part is if this has bottomed out and this is going to start to trend here on the bull side, usually that means markets are going to head lower. So if you kind of look at this as a graph, it drifts towards that bull side and then drifts back towards the bear side. So right now, we've kind of topped out on the bull side, in my opinion, looking for a move back to bears. Moving over to seasonality for September, this is a pretty choppy month, historically one of the worst trading months of the year. And you can see, based on history, at least a 1% down move, and you can see it's choppy within that. So NASDAQ dipping to minus 1%, rallying back, and then dipping back to 1%. So sideways choppy action to slightly bearish for the September month. Doesn't mean there won't be any rallies. You can see some rallies in here, but then typically giving that back. So fits with that overall bearish thesis as we go into the September month. And then looking at the calendars here, you can see Monday closed for Labor Day, Tuesday down 11 of the last 15 for the Dow, but the S&P is up 18 of the last 28. So kind of mixed markets there. ISM index, beige book here on Wednesday, ISM orders, ISM services, productivity for Thursday, employment rate. So we get some employment data on Friday. Not a whole lot this first week, but the second week, pretty bullish here. You can see those three bullheads in a row for the 10, 11, 12. So this week, probably not so great. Next week, maybe a little bit better. Moving over to the economic calendar, you can see Monday is closed for Labor Day, but for Tuesday, ISM manufacturing PMI, manufacturing prices, Atlanta Fed GDP. Shouldn't move markets a whole lot. You also have manufacturing PMI there at 945, expected to be below the 50 line there. And then looking at Wednesday, we start with that unemployment data. JOLTS job openings coming out at 10 o'clock there. That'll be the big one for that day. Initial jobless claim has been interesting. ADP non-farms also coming out on Thursday at 8:15 and 8:30. And then you have global services PMI, ISM non-manufacturing PMI, non-manufacturing prices. And then for Friday, the big one, we have all of that jobs data coming in, non-farm payrolls, average hourly earnings. And then, of course, the unemployment rate expected to step down, interesting, to a 4.2 from a 4.3. If that steps up and breaks expectations or even goes higher to a 4.4, I think that's going to be quite dramatic for markets, potentially leading to markets pricing in a little bit of a harder landing. So big jobs data this week, super critical. This crashed markets last time. And if it comes in any higher than the previous read, I think markets are going to move down substantially. Moving over to Max Payne. Max Payne's down at 554, current stock price 563.50. So quite a bit lower. That didn't mean too much last week, and this week it's probably not going to mean a whole lot either. But look at this call wall, 570, big call wall relative to everything else. Not a ton of options in the market at all either. You can see only 579,000. Put call ratio still fairly high at 2.46. Overall, this looks a little bit bearish to me with that huge call wall. Not a huge number at only 28,000, almost 29,000, but it is by far the biggest marker versus everything else. If you zoom out, the next highest one here is all the way down at 505. And then down here at 455, 100,000 down there. So obviously I don't think we're going to get anywhere close to those, but close to the money here at 57, 570 definitely could push markets to the downside slightly. Moving over to the charts, looking at the S&Ps here on the weekly chart, you can see we are still right at that trend line. Talked about this as a zone of resistance for multiple weeks. We did close above it last week. We closed basically on the same line here this week. Dipped down pretty substantially down into that 55, 65 area, and then we rallied back to finish right on the highs. If we get a continuation here, we're going to be at all-time highs once again on the SPY. After that 4 big down weeks, and now we've had 3 bullish weeks in a row. Momentum says that this could continue, but last time we saw a move like this, we did get 1 down week before seeing that continuation. So just something to consider there. Basically a doji week. Might see a slight pullback this next week, which does once again fit with that September seasonality thesis. And looking at it on the daily chart, it continues to look pretty bearish. We've tested this zone multiple times, continuing to look for a little bit of a pullback there. Momentum looks slightly bearish. RSI, you got lower RSI versus this previous wick highs. We did get a bounce off of the SMA, but we'll see how it plays here. This is a zone of resistance. If we break through, probably going higher, price discovery potentially, but right now zone of resistance, and we have not broken that yet. And then looking at levels on the SPY here, you got 565.16 as your all-time high, looking to push to that level, then we'll see what happens. If this double tops, that's going to be terrible for markets, but if it pushes through, there's some room to the upside, just like we saw in the previous. And then 560.07 is your current support, tested that multiple times, tested it on Friday, gapped through that level. And then if that breaks, you got 554.87 below it. I honestly thought this was going to accelerate down a little bit more, a little bit sooner, but it seems like we're either getting a fake out here and a retest and then a double top, or this is going to break higher. Right now it looks like a break higher is more likely. Moving over to the Tasty charts on the weekly here, you can see we're right at that second ATR band. That is at 564.28. Haven't been able to get above that yet. It's 2 weeks in a row we are hovering at that level, looking to see if we can push to that next one at 578.50. Seems a lot higher. Definitely would be price discovery if we did get up into that zone. Momentum slightly bullish, no volume over the past couple of weeks. Really would have wanted to see some volume going higher there, but looking at that ATR trailing stop all the way down at 522.26, still in bullish conditions on the weekly. Moving over to the daily chart, though, you can see, again, second ATR band, still right in that same zone, 563.28. We are in bullish conditions here, so we did take out that ATR trailing stop back here around 558.90. Pushing to that upper ATR is going to be 571.56. Momentum fading, did see some volume on that last candle, which was bullish, so maybe that means we get a little bit more continuation there. But right now, we are still in this consolidation. And then moving over here to the NASDAQ, you can see We ended up negative on the week, 0.74 to the downside. Momentum continues to be basically flat. RSI continues to break down. You can see this is trending lower here on the weekly chart. So weekly RSI says that this should go a little bit lower. Much different structure here on the NASDAQ with a high and a lower high setting up in my opinion. We did test this trend line here and catch a little bit of a bounce, but that's an inside candle after 3 bullish weeks. And it seems like this is set to roll down a little bit more. Trend support is 19,491. And then looking at this on the daily chart, you can see we did fall to that level after breaking out here, clear breakout, retest, and now we did have an up move on Friday, so maybe we're getting a little bit more push here. The daily chart looks a little bit better. Daily SMA also moving higher. And then looking at the daily chart here on the Qs, you can see I'm still watching this as a lower high. I have that trend resistance there at around 478.80. Momentum flat, RSI retesting the SMA. If this is a breakdown, retest, breakdown, that's going to be quite bearish, but we're still not back above the SMA yet. In terms of levels, we got 477.69, and then above that, I have 481.94. If we break down again, 471.91 is the level. This is actually a pretty wide range, so tested the low, almost got to the high over the last couple days, really. So still in this consolidation, waiting to see if this resumes to the downside and tests that 21 EMA down at 464.40. Moving over to the NASDAQ, very similar thesis with the dip down rally. 3 weeks in a row, and now we got a down week. Tested that 8 EMA, still can't get above that first ATR band there, which is at 477.47, so right in that zone here. If we did push to the next one, that would be 497.27. We haven't really shown any signs of being able to make that kind of a push. Momentum still fading. No real volume since back here on the week of 5 August. So again, still looks like a high, lower high setup. Technology has not been doing nearly as well on the NASDAQ compared to the SPY. And then looking at that daily chart here, you can see we hit that upper ATR. We hit that ATR resistance and that second ATR band that was sitting right there at 484.23. And so far we have pulled back. Hit the midpoint here, hit that 21 EMA, which was at 470.95 on the NASDAQ, touched that level and then got a little bit of a bounce. So we'll see if those EMAs are going to hold in there, see if we get a little bit more rally. Right now, off of that move on Friday, I would expect a retest of this previous high here in the ATR trailing stop. So still bearish conditions and looking for a price of 484.32. Moving over to the weekly chart on the Russell here, you got down 0.14, tested that next level and rejected, still hanging out on the trend line. So this is a breakout, retest, looking for a continuation here. 226.01 is the next level. Momentum bullish, RSI still technically bullish there. And then looking at the daily chart, still looks good. Big breakout here, retested the 9 EMA, held that level twice, continued higher. Need to see it break that trend and push on the daily chart. Hasn't done it quite yet, doesn't look as good as the weekly chart, but I still think this is going to continue here. I like the Russell, and I think at least you get a double top up to that 226.02 level. Moving over to the Russell here on the Tasty charts, you can see still a bullish trend on the weekly, still bullish conditions. ATR stop is all the way down at 192.55, so it's a long way lower here, but it is still bullish conditions. Second ATR band is the price target right now at 224.30. If we push to that upper ATR like we did on this previous, that would be all the way up at 233.05, but either way, this continues to grind higher here on the weekly chart, even with the down week this week. And then looking at that daily chart, similar to the NASDAQ, we're still in that bearish condition. ATR resistance is 222.39 right here. Touched that level back on 26 August, pulled back, held the 8 EMA, and now we are rallying back towards it. ATR bands, you can see, are contracting here, so we did test it here, got a big widening. Now we're pulling back, seeing that volatility kind of come out of the Russell. Either way, though, I like this push. It has maintained the momentum, which is also bullish here. And then that upper ATR band potentially has a price target at 225.34. Moving over to the Dow, massive week again here, 1.06% broke this trend line here, pushing to that next one. This week it was right around 416.89, and the high of week was 416.55, so just a few pennies off of it. Next week that trend line is going to be at 418.15, and looking at that daily chart, it seems like we're at least going to get a test there of that 418.24 area. Momentum bullish, RSI bullish, not overbought yet. All-time highs for the Dow. Remember, this is still price discovery, and I think it is going to go at least a little bit higher. And then we'll see once we start to hit these longer term trend lines here. You can see that next trend line marks the top back here in May, marks the top here in July, and now I think it's going to mark one more top here. So see how it plays. Definitely an interesting zone. zone, but still a little bit more bullishness going into that next session. Moving over to the equal weighted S&Ps, you can see 3 bullish weeks in a row, got another all-time high, closed on the high, still looking for a push to this next trend, which is sitting up around 179.34. Momentum is bullish, RSI getting very close to overbought conditions, but not quite there. So everything continues to look quite bullish here on the equal weights, which makes sense considering that we're seeing breadth continue to hover while the NASDAQ is moving lower and technology hasn't been leading markets to the upside the same way that it has over the past couple years. Moving over to the ratios here, the SPY Russell actually managed to turn a little bit of a bullish week here. So SPY and the Russell did okay on the week. 2.55, still hovering in the same consolidation, still hovering at that trend line. Thought this might rip to the downside a little bit more. I still think it will go lower. This is a clear high, lower high setup. Think we're going to get more move to the downside there. So Russell outperformance, still like the Russell. And then the NASDAQ SPY doing the same thing that we thought it was going to here. Let's go ahead and extend out this trend line. Right there, clearly gapped through it, continuing to the downside. The NASDAQ continues to be the worst performer, whereas the SPY and the Russell still did okay. Moving over to the S&Ps divided by the M2 money supply here, you can see we've been on this uptrend. We're still in it here. Pulled back, retested that trend line. Looks like we're continuing up to this next zone. Or if we get that double top, we're going to reject here. But the next level would be 27.25. Remember, these levels are going all the way back to the dot-com bubble. We are very extended. But looking at the SMA, you can see we've broken down, retesting the zone. If we reject from here, that's going to be very bearish. We've seen it before where you kind of get here and then break out. And you can also see a clear lower high there on RSI with higher prices that we got here versus here. So RSI has been weakening. This again seems like clear divergence. RSI much lower at a 66.4 versus 75.75 with basically flat price action here. So RSI is weakening. Is this going to be the top? Certainly possible, but right now it still looks a little bit bullish to me. Moving over to Apple and Tesla here, you can see Apple continues to look pretty good. Broke this trend line here, looking like it's pushing. The last 2 weeks have not been super strong. Still can't really get above that 230.28 level, but structurally, it's still intact, still bullish. Momentum continues to fade, but it's flattening out here, so could potentially resume this slight rally that it's had over the past 2 weeks. And then looking at that RSI, we broke back above the SMA, still trending higher. Probably going to set up a lower high here, but definitely looks okay going into the next week, maybe 2. And then looking at Microsoft, very different thesis here. This still looks like a consolidation, potentially distribution with this clear consolidation. Tried to break out here, back into the consolidation, dipped low to the 55, so still waiting for these EMAs to consolidate around this 413.36 area. Could take a couple more weeks for that 55 to make it up here. Momentum flat, but still bearish. 21 EMA on the weekly is your resistance right now at 425.13. Maybe we see a slight push. We touched it 2 weeks ago, rejected clearly. 413.36 is support right now, so still in this consolidation. Doesn't look super good. Just waiting for that 55 to move higher. Once that breaks, I think we're going lower on Microsoft. Moving over to Tesla and NVIDIA. Tesla continues to be in this wedge pattern. You can see we had a downtrend. We broke that here. Now we're in this kind of consolidation, sideways triangle action. Tested the low, tested the high, both during this last week, and we still have not broken in any clear direction. So right now, looking for consolidation, waiting for that clear move. Momentum might see a step to bullish after testing that low. RSI, basically neutral, but it's below the SMA while it continues to trend higher. Lower RSI set up there, so could go either way. Not clear direction on Tesla. And then NVIDIA had earnings this week, could not deliver a blowout. The earnings was very good, but this is an expensive stock at current levels. 130.35 was resistance, broke the trend here, broke the 9 EMA, broke VWAP. 21 sitting down there at 110.17. Momentum back to bearish, RSI breaking down. You can also see this consistent lower high setup on RSI, so this is probably going to break lower. Price target would be this previous low around 90.63. Does have some zones of support in here that need to break before we get there. But if this is a true lower high setup, which at this point it looks like it is to me, you should expect a lower low. And that 55 EMA is sitting all the way down there at 77.74. Moving over to Amazon and Google here. Amazon had a nice week, 0.82. Momentum swinging to bullish. RSI still bearish there at clear resistance. 21 EMA would be your next target at 182.56. Just above my level at 181.41. Amazon does look pretty good. The daily chart looks much better. We talked about it over the last week or so. This downtrend did break on the daily chart, and you can see it's just barely above it there on the weekly. The structure is still bullish, despite that bigger down move we had. Tested these lower trend lines, tested that 55 EMA. I still like Amazon here. It seems to be hanging in there pretty well. Not the same thesis on Google, however. You can see this looks much weaker. Consolidation rally, elevator down, tried to rally up, couldn't even test this 21, couldn't test VWAP, had a down week this week, 1.3%. Momentum still bearish here, RSI very bearish, below the 50 line. I still think this is headed towards that 55 EMA in the 152.16 area. Does have this trend as support, tested it this week, bounced a little bit. Once it breaks this zone, however, 161.59, I think it's going to go straight to this next level here, which would be about a $10 down move for Amazon, pretty substantial. And I do think it has a lot more room to the downside. Let's go ahead and extend out this trend line here. Pretty much right in that same zone, some trend support around the 155 area. But once they're this close, usually the next level is where you head to, which is that 55 EMA. Moving over to staples and discretionaries. Staples continues to be on this rocket ship. 3 very strong candles in a row. Momentum bullish. RSI super overbought. All-time high close for the weekly. Everything continues to look good. Price discovery. And to me, that says this is more risk off. Markets are widening in their breadth, moving out of tech, moving out of growth. And you can see here on discretionaries, hanging man candle doesn't look super great. Momentum is bullish, did step to bullish here finally after the last 2 weeks of powerful movement. Tested support, could see a rally off of that, but doesn't look super great to me. RSI kind of neutral, it's above the SMA, trending higher slightly, but you can see last time we were trending higher here, we did push right through that, so this looks more like consolidation in my opinion. Technically bullish above all the EMAs and SMAs and on this short-term trend here, but similarly to the other charts, if this zone breaks, I think we're headed back to these previous lows down around that 200, which is at 167.82. Moving over to oil and gas and financials here. I want to watch oil and gas pretty closely this week. You can see once it breaks this SMA, typically it has some pretty powerful rallies. You can see here 4 weeks in a row of strong moves. And then this one, about 8 weeks in a row, very powerful moves. We're kind of in this consolidation at a zone of support, waiting for this RSI here to break. You can see just a little bit off of it, waiting to see if we get one of those impulsive moves just like this. And if that happens, you could see an absolute massive rally, push to the 162 area, maybe even as high as 170.60. So definitely something to watch. Could rally right through these levels over the next coming months on oil and gas, watching that one. And then financials, this has been a massive rally. One of the best performing sectors, if not the best here. Almost 3% on the week, all-time highs, closed right on the high. This is 4 weeks in a row of powerful movement. This is getting the benefit of that rate cut coming. Momentum bullish, RSI super bullish. Obviously it's overbought, but this is continuing to look very good here on financials. Moving over to 20 and 50-day breadth, you can see 20-day breadth at these super critical levels, 91.25. You don't see it very often. Last time we saw it was back here in November of 23. And then before that was all the way in June of 23. So super critical levels. Usually this is where markets start to top out. Last time we saw it, we had about 5 weeks of consolidation after seeing that touch. And then after that, we did get the down move. So something to consider. It will top out in this zone. It does it every single time, but it can take a couple of weeks to do it. You can see back here in October of 22. We had 1, 2, 3, 4, 5 weeks of consolidation after touching that zone before we saw the bigger down move. So could take a little bit, but definitely an extended area. And then looking at 50-day, continues to look good here. Broke this trend 2 weeks ago, got a continuation here this week. 83 is the next level. Once this starts to get into that 90 zone, you can see that is the top of markets typically on the 50-day. And the 50-day doesn't take nearly as long to consolidate. Got here 3 weeks, down move. Got here 1 week down move. Similarly, 2 weeks down move. So 1 to 2 weeks, if we get into that zone, obviously we're not there yet. Momentum is still bullish. RSI is still bullish. Has about another 10 points to go before we hit that zone. So something to consider. 50-day continues to look good, even with the 20-day already at very extended levels. Moving over to 200-day breadth, you can see we got the break on that trend 2 weeks ago, just like the 50. Continuation candle here. Looking for a move up to this previous high around 82.70. Momentum bullish. RSI bullish. Continues to look good here on 20-day breadth. Makes sense why we're seeing that fear and greed index moving into fear or extreme fear, continues to look pretty decent here. And this could have a long time. So the 200-day chart can have a long move. You can see many weeks in this very extended zone. Similarly here, remember this is going all the way back to April, May of 21, but then it hung out here for many months in very extended levels. The all-time high is up in that 96.50, 97 zone, and we're down in the 70s. So this could have a couple more weeks of rally, could be powerful from this zone. After the clear breakout, we've seen momentum bullish, RSI bullish, which is part of why you can see that 20-day kind of hang out, waiting for this 200 to get into those extended zones. And then once it gets there, we start to see that rollover. So overall, this continues to look pretty good on the 200 after the last 3 weeks of bullishness that we saw. Moving over to the dollar, this is one of my biggest concerns here for markets. You can see very powerful week, 1% higher, momentum stepping to bullish for the first time in a long time. All the way back on 1 July, we started this down move, and now here at the end of August, we saw that first bullish candle, and now we're seeing a potential 1 September move higher, 9 EMA sitting all the way up there at 103.2. If this dollar has one of these moves like this, where you get an extended down move and even a partial retracement, that could be quite bearish for markets. So something to consider. Dollar finally showing a little bit of strength. I was reading that markets thought we might get 50 basis points, and that's why we saw such a strong dollar sell-off. Didn't quite make it to the 200, but that 50 basis points is not going to happen in my opinion. 25 basis points, dollar starting to recoup some of those losses. And if we do get an eclipse of this 19 August candle on this next week, that's going to signal to me that we're going to see a little bit more up move, maybe as high as 103.6 or 104.4, back to these previous kind of consolidation lows, or maybe the 55 EMA in there. If that happens, I think markets are going to turn to the bear side pretty substantially. So something to watch here. Dollar starting to show a little bit of strength, and I think it's got some more in the tank after this extended down move and seeing that oversold condition with the dollar hitting 28.27 on the weekly RSI. Moving over to yields on the weekly, look at these charts. So the 2-year is hovering right at that 144 EMA. Momentum stepping to bullish, RSI showing a little bit of divergence. Could see this rally a little bit. I don't think it's going to move too much, but look at the 10-year here sitting at 3.9. Got a strong candle, strong consolidation, momentum stepping to bullish, RSI looking for that SMA. I think we probably see normalized conditions maybe this week. If we don't see it this week, maybe next week, but this continues to look very close. You can see we're just barely off of it. Less than 200ths at this point, definitely within striking range of normalized conditions. 9 EMA sitting up there at 4.026. Think we could get there, need to eclipse this previous level. And then once we get there, remember that is the timer for when we start to see markets turn pretty bearish in my opinion, usually within 6 months. I think it could come a little bit sooner, but normalized conditions within striking range, probably coming within the next week or two. Moving over to bonds, J&K still hovering at this level that we were at 2 weeks ago, almost unchanged, just 4 pennies to the downside. Momentum still bullish, RSI fading slightly, might see a slight pullback. I think we said that last week. Got a little bit of a down move, probably has a little bit more in it to the downside, definitely extended. 96.51 is the level, and then looking at TLT, we talked about this being kind of done here in the short term. We had a huge push going back to that 29 July candle, over 5.5%, gave some of that back, held the trend, and now this is a pretty classic candle pattern. Big rejection wick, 2 retracements, big down move. This probably has a little bit more down move in it. VWAP down there at 94.65, probably going to find some support in there on this trend. I still like this over the medium term, but short term seems to be a little bit bearish. Sitting right at the level at 96.50, but we'll see what happens at this zone. Needs to hold support if it's going to continue higher, but I do expect it to at least test this trend down around the 96 zone. Moving over to the VIX here on the weekly chart, you can see we are still elevated, still holding this 1470 level. We've had a couple of down weeks, tried to wick higher, couldn't gain any momentum. We'll see what happens. As long as the zone continues to hold, I think further spikes are likely. If the zone breaks down, then we're probably going to fall to this area here and then consolidate for a while. Right now, momentum fading to bearish, RSI fading to bearish, so maybe this breaks this week. Gives markets a little bit more room to the upside, but critical zone, need to see what happens. We've been here for 2 weeks, and like I said, bearish on equities if it bounces, bullish on equities if it breaks that zone. Moving over to my accounts, I did pretty well on the week, making just over $2,000. Looking at my positions here, currently a covered call at 217 on the IWM for $3.30 credit, so really not a ton of room for profit there, just continuing to roll this out slowly day by day. And then looking at the Qs, haven't moved this position much either. either. 470 for the Wednesday session. We are well above that. If this breaks higher, I'm going to have to do something with it. Still some potential profit in it with that $500 loss. Should only be closer to $200, so we'll see how it plays. And then looking at the puts, I do have some 472 puts for that Tuesday session, 76 cents on that. So at about another $1.20 or so left in it. Again, if markets start to break higher, definitely going to have to make some adjustments, but moderately bullish going into that Tuesday session based off the move that we saw on the Friday session. Let me know down in the comments section what you think of the Fear and Greed Index or the 60/40 portfolio. Are you buying dips at this point? Or is this a trader's market right now? Definitely some mixed signals across markets. I'm certainly trading it, not really buying for the long term at the moment. But what are you doing? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.